Therefore, that will support that you will win. Therefore, you can be really confident that you have a winning attitude. Okay. I hope I'm not talking down to you. Okay.
No, not at all. Not at all. I understand.
After you have that, then we have to have a clear goal. Okay. Then say, what do we want to accomplish? Take you for example. I take you through that a little bit. I think currently our goal for you is to say, let's put aside $5,000. Okay.
Right.
Then try to use the ETF index fund, SPY or Dow. It's called DIA.
Okay.
The other one is Nasdaq QQQ. Depends on which is more appropriate.
Okay.
You will learn as along the line. I'll teach you more about that.
Okay.
Then we'll see when to get in and when to get out. Hopefully, we don't have to get in and out too much. Okay. So that's our goal. Okay. Then if we actually feel that we're comfortable, give me 1 second. I think let's have one trade pass.
Yeah, no problem. No problem.
See what is that. Okay. Oh, okay, good. That's a good example. Remind me, make a note, remind me to revisit what I just get, the trade I just get. Okay. Because that's relevant to what we do.
Okay.
Okay. So then you need to have a good psychology. As we talk, it's already dealing with the psychology. Before you decide to get involved, what you need to know. I think I get you well prepared before what you expect, right?
Right.
And after you get involved, what do you need to learn? So I urge you, if you have write any note about that, I urge you actually also review that note from time to time.
Okay.
So actually talking about some, what do I say, mechanism to help you more. What kind of cell phone you are using?
It's a Huawei.
What's that?
It's called a Huawei.
Okay, I never know that.
Yeah, yeah, it's European.
So is your computer, how do I want to say, your, is that app easily to help you to keep notes?
What do you mean? Which app?
For example, today we are talking about this. If you actually keep some notes, would you be able to put that notes in your
iPhone? In my phone. Okay. It's not. I don't have an iPhone.
I'm not talking about Wi-Fi. I mean anything. Any phone you have. If
I can put notes in.
Yeah. Do you have
I can type notes in, yeah.
Okay, so do you actually can create a note and start to put information there, then you can refer back to that?
Yeah. I mean, what I have is like a notepad.
Okay.
But you mean more?
You have a notepad on, you mean you have a notepad
like
on
where I can, on my phone, where I can just type in stuff.
Okay. That's a good start, okay.
Okay.
So, take for example like this, I'm teaching you, I can send you the file. Would you be able to put that, copy and paste that file to those notes?
I'm not sure.
Okay.
I would have to see. You know what the thing is, Steve? I had a Samsung that was really kind of easy to use.
Yes.
And when I got arrested, they took my phone away. And so I got this one, and I don't really know all of what it can do.
Okay.
Actually.
Are you going to get your phone back?
After the trial in October.
October.
I have to go to, I have to go to court in October. Yeah.
Okay.
But it looks like I have images on here. I think and they have documents, images, archives. I think that I can do that.
Okay.
I think I can on my phone. I just have to like look at it a little bit.
Just play with it. I think to me, something quite important is that you are able to save some information easily.
Mm-hmm.
Then will be easy for you to refer to.
Right.
That will be, for the time being, I'll just keep doing this recording.
Yeah.
But if making notes is very, how do I want to say, it's a little bit was suitable for you, only the important information you need. Like, just imagine this is for you to, or you in a class, you need to pass the class. You will come up with something to do better. This is one thing I'm trying to teach.
Right. Instead of the whole meeting, just to take out the parts I need.
Because we are, I think the point I'm making is that, I don't know, I hope you are not one of them, but majority of people after they graduate from the college, they kind of stop
learning. Learning.
So when you are a student, you do everything possible to learn something fast. Mm-hmm. And after people graduate from college, then people change to the mode. See, you know that how much I study how people learn, right?
Yeah.
People change to the mode, become very passive. Okay. They hear, then if they actually they absorb, they learn. If they don't absorb actively, they just forget.
Yeah. So, I mean, I had to learn German when I came here, late in life. So that kind of keeps my brain going.
Okay, good.
Yeah.
So let's not go too far from the main subject. Okay.
Yeah.
So after we talk about the psychology, the next thing is that you need to have some general idea of the financial markets and the current situation. What actually affecting the market. Okay. This is not easy for the beginner because the beginner usually you hear the news, then you get shocked by some news. You don't have the ability to judge, what type of, how much you need to pay attention to news. You don't know what actually news will affect. Take it for example, Trump tweets something. Our great president Trump tweets something.
Wow.
The market drop. Okay. Then the next day people say that's no big deal. Then it bounces back up, right? Okay. Things like that. Or say, oh, Trump fired the FBI. Then the director, then Dow Jones dropped 400 points. Okay.
Wow.
Within a week, it recovered completely.
Okay.
So I'm not asking you to know all this, but at least you know something's going on.
Right.
Now I think I'm better equipped with the idea how to handle that. Then I'll start. If actually, you probably already get a gist of that. I already spent my energy explaining to my reader on the Facebook.
Yeah, I read. Well, I actually followed your messages online on the Line one, and I saw some of the things where there was stuff going on in the news.
Yeah. So you know my point. That should illustrate the point what I'm trying to do, because I think that is one of there's many important things how to be a good trader, but that part is very important to know how to deal with the information, what to ignore, and when in the uncertainty, what do you have to do? Okay. Then the next one is also very vague. Some fundamental knowledge of the company you want to own. Okay, let's say you don't want to own a company which is really crazy, lousy, bad company, right? You want to know the company actually is making money. Eventually, the stock will go higher. Yeah. But it's not easy to actually understand well enough. So I say just some knowledge. So what do I mean by some knowledge? Is that actually go with the stock, the news, everything. If you continuously hearing something is better, it probably is true.
Okay.
So you continually hearing of this so-called FANG, F-A-N-G, Facebook, Amazon, then that probably is true. Okay. So that will be a start. Okay. Again, I'll teach you how to handle that. Okay. The the next one is you need to have a good technical analysis ability. That is the core of my thesis here. So that I think to me, the most helpful one is a candlestick, okay?
Okay.
So be very good at the candlesticks. But
Okay.
what do I mean by be very good at the candlestick is at least master one of this Stephen Bigelow's signal, those videos explaining
Yes.
what is what and what are those significance. You need to watch it many, many times, okay?
Yeah.
And start to make notes and say what helped you, okay?
Okay.
Then you need luck. Okay. Okay.
Yeah.
So
yeah.
Now let's focus on this one. Okay. Do you remember what doji is?
The doji, is when the price opens and closes at the same
area, same price.
Area.
Exactly the same price, right?
Yeah. Yeah.
Now, this is SPY. No, I don't want you to worry about 1 minute charts. Okay. This should be big enough, right?
Yeah, it is.
Do you see doji here?
I mean,
the answer should be yes, right?
Yes,
so
yes.
Has to
there's
be
there's a couple of them. There's a few.
Okay.
Yeah.
Now, what do you think about this one?
Where are you?
Can you see the one? Can you see my pointer?
Yeah.
Okay.
It looks like a cross.
It's a cross, right?
Yeah.
That's the doji.
Yeah.
But it's not a typical doji because you can say it's long leg doji downside. Okay.
Okay.
But it's close enough. Okay.
Yeah.
And then you see this one.
Yeah.
Okay, close enough. Okay.
Yeah.
So this one, close enough, right?
Yeah.
Okay. So with that idea in mind, then I want to expand your knowledge about this. Doji means what? What do doji means? What do doji for that day, the trading of that stock?
Okay. The line that is going horizontal, it represents the price that it opened at and that it closed at.
Yes.
The top of the doji represents the highest price that it traded at, and the bottom of the doji represents the lowest price that it went.
Okay, you learn well. Okay, that is a definition. Okay.
Yeah, that I remembered.
Okay, so now what you need to move one step further is what do this tell you about the market action? Okay, now I'll explain that to you. This tells you that it opened here. Okay, let's make this really big. This one is in question, okay?
That one? Okay.
This one, okay.
Yeah.
Even though there's a little bit, that assume they are exactly the same, but
okay.
One thing I want to tell you, I want to start to teach you that if you see up and one go above and below are similar, this actually pretty much tells you that it's indecision. Okay.
Okay, you mean that the height, the amount that it goes up and down is equal.
Yes.
And that shows indecision, right? So that it looks like
Okay. So that's your beginning point. Okay.
Yeah.
Now, with that idea in mind, we can expand that idea a little bit. We don't have to be open and close right at the same place. You can have some range, but still the upside wick is a wick, W-I-C-K, wick, like the
the wick, The
wick. Okay, the wick. As long as you see a lot of wick on top and lower and kind of similar range, you all look at it as says indecision. So what do indecision means? Meaning the bull and bear are fighting, but neither one is winning.
Right.
So what do you do when you see something like this?
What would I do? You mean as in terms of buying or selling, or what, or staying the same?
What would this affect?
I guess I would stay. I think I would stay and wait for another signal.
That's on the right direction. Okay, now write this down on your note.
Yeah.
It's called Doji rule. DOGI rule.
Yeah.
RULES.
Yeah.
Rules.
Yeah.
Okay. So go back to review. When you have a chance to watch the Steve Bigelow video and look for Doji and pay attention to the Doji rule. Okay.
Yeah.
Essentially it tells you if you see Doji, what you need to pay attention to.
Yeah.
Okay. The first thing comes to my mind is that you wait, just like you are right, saying wait for next day. If next day open higher, meaning the bull is in charge because the bear gave up.
The bull is in charge. Okay, yeah. If it opens higher.
If you open higher here, meaning the next day, right? If open lower, meaning bear is winning. Okay. Yeah. But what do you see when you see this?
But here it opened higher, but then it closed lower.
Yeah. So imagine that day you start out, you say, oh, looks is doing high. Actually, during the day even goes
goes higher. Yeah.
So then you say maybe it's going higher, right?
Yeah.
Let's fast forward. The whole day finish. Look like this. What does this tell you?
You mean at the end of the day, it's closed lower than it opened? So it seems like the bears have more.
No, now it's another indecision. Right?
Okay.
It opened higher, maybe open higher here, then got sold off and during the day, then at some point actually managed going very high, then drop, right?
Yeah.
And bear taking charge, and at some point bear taking charge sells a lot, right? Then come back here. So if you look at this is somewhat similar to this.
But then it closes at the bottom of, I see what you're saying. I get you.
Can you see the similarity between
I get it. I get it now. Yeah. I get it.
So if you move on the left-hand side, do you see similarity of them now?
Yes, I do. Yeah, because it's actually, I mean, even though it opened higher than the green cross there, and it closed lower, it's kind of in between that.
Yes. Okay.
Yeah.
So
it's again indecision.
Okay. So to my eyes, okay, this is a big stroke. Look at the whole thing here, from here to here. My mouse doesn't listen to me. Okay, from here to here is somewhat a range of indecision.
Again, from this whole line, you mean?
The whole range, what I see, show you.
Indecision.
Can you appreciate what I'm trying to tell you? It's somehow, because see how many of the nice dojis? 1, 2, 3. Okay. Then, although it's going up and down, that's why somebody can be better, somebody cannot be better. Is that if the person cannot accept some of this
up and down,
then you will not understand this. Okay. What I'm trying to teach you is when you see something like this give you a sense that this is indecision, this period of time.
Okay.
And also see, I already draw a box here. That's because I managed to identify this to be, when I see that, I propose that to be a trading range. Okay.
Yeah.
So see here, now I zoom in or zoom out. Okay, so you can see that my trading range is not too off until here, right? Because during this period of time is I was kind of right. Then it breaks out of the trading range.
And what point did it break out of the trading range? Right there?
You see here, okay.
Yeah.
So I'm teaching you an indecision. First, I'm teaching you the idea to identify the indecision time. Yeah. During the indecision time, you try not to take action.
Okay.
Okay, because it may go higher, it may go lower, because you will wait until the bull win or bear win. Okay.
Yeah.
You follow me so far?
I totally get you. Yep.
So as you go here, let's say you go this day, you say, oh my God, if you only look at that day, drop, right?
Yeah.
Then you may get concerned if you actually are long because you're losing money. But by the end of the day, you coming back, right? So this that.
And you wait then to the next day, or
the bear was not able very successfully to push the price out of the trading range. Okay. Why is that? It's because there are many people has similar skill or better skill than I looking at the trading range. So they say if the trading range, I can stick with it. So if bear try to sell this, they say no worry, I'm buying back.
Okay, I have a quick question.
Yes.
What are you identifying as the trading range?
Okay, that's a very good question. Okay, I see here, I go higher, go lower, higher, lower, and go to here, cannot go even higher, right? Lower, cannot go lower. So by now, if I only come to, how do I do this? Assuming you don't see anything after this, okay, only see to this point. Okay.
Where your arrow is.
Yeah, only see the arrow. Okay.
Yeah.
Then I will propose probably the trading range is just this area because you see the top. So like every day you kind of see that the recent days to see what the high, what is the low.
Okay. And going back to that one doji, I guess it is a doji.
This one?
No, the next one, the red one, where no, to the right.
To the right.
This the one where the bears down below, where they went. That next one, that one.
Right or left?
I mean, right there, that one that your pointer's on.
Okay, what do you want to say?
Yeah, what I want to ask you is, so what you're saying is that even though it dropped really low there it closed again back up in the trading range? Is that?
Yes.
Yeah, okay.
Okay, so today I think I make a big attempt because I actually assume you are a pretty intelligent people, so I'm challenging your intellectual ability now, okay?
Okay.
So you asked a very good question, how to decide the trading range. Let's look at here. From here, see from this bar to this bar to this bar to this bar to this bar until before this red one, okay? Do you actually see that the bottom seems to be here, are not able to fall below this one, then top is not able to go higher?
Yeah.
So this, at that point, let me try if I can do this. Actually, this is also a good learning experience for me. Okay, so if I put a box, can you see my box? My new box.
I can see your new box.
Okay. So until I see this red, if I say this look like me to form in a new trading range, does that make sense to you?
Yeah.
Okay. Yeah. So if I don't see the next one, I'll say this is a trading range I'm looking at. Got ya. Then you move to the right. See, I love this because I'm learning something to teach people. Okay.
Okay.
The next day, suddenly you see that actually bull become more aggressive and the bear become more aggressive. So suddenly they may actually expanding my trading range.
Yeah, by the next red.
So then I will entertain the idea maybe the trading range is going to expand. Okay.
Okay.
Then we move one more.
Yeah.
Okay. Now you can see that it's not able to go higher. So you can say yesterday go much higher. It's a fluke. Okay.
Right.
And also you can see that it's already have something go below the new trading range I'm watching.
Right.
Right? So I say, still indecision, but look like as of today and yesterday, it tried to move lower.
Right.
So suddenly I can expand my trading range to here now. Right?
Okay.
Following me now?
Yeah.
Okay. So let's stay with that. Okay, let's keep moving to one more.
And the upper limit on the trading range stays the same.
Because to me, I only go out one day, so I call that, I consider the aberration.
Yeah.
Okay. So now you move one more days.
Yeah.
Okay. Then you start to validate your trading range. Our trading range seems to be okay, right? The bull actually managed to actually push a little bit
higher
on top range, but was not able to push too much. Okay.
Okay.
So you move the next day. So when you go to the next day here, you can see that looks like the lower end of the is pretty nice. It's not gonna get violated, but bull actually try to take it higher. Okay.
Yeah.
So now by now, then my trading, the way I look at the trading range change. I hope this makes sense to you. Let's make a new box. Oh, I started wrong place. Okay, let's do it again. This makes sense to you, right?
Yeah, yeah. Are you gonna move your trading range up?
Okay, yes. See, because I restarted, because now since I see this,
I
see this, and I see this. So I decided to expand my upside of my trading range higher now.
Yeah.
And I keep my lower range still here. Okay. So because this day, look like this day people are pretty optimistic, then got sold. Okay, so the bear will make an attempt but lose the battle to the bear. So the next day actually help you to determine the lower end again, right? Yeah. So this to me, this trading range is established even better now. Okay. Okay. So that come to the question you started. So with this many days of the trading range, I'm more convinced. The technical analysis, actually what behind that is statistics. If you actually see that they actually last more days, then what your observation will be more valid, okay? So you look at this, my lower end of the trading range, you got touched once, twice, three times, right? Yeah. So that makes it more valid. Also, the upside is touched 1, 2, 3 times. It's more valid. Okay. So this trading range become more valid. So actually, the next day is testing this lower end trading range. So so people sell it, but because again people know the same thing I know, so they decide to say I'm willing to take a bet to buy it. Okay. Now you follow me? Yeah. Okay. This is very important knowledge to me. Okay. Okay. Now, let's step back. Look at the trading range I draw. One is here, then it's managed to break out. This is called a balance area. Every trading range is called balance area. So you have the balance area. Once the balance area finish, the bull taking in charge, the move come to get a so-called vertical phase. So suddenly jump to the next level. Okay. Mm-hmm. This make a big jump. Then once this make this big jump, then I start to watch how will this keep going higher like this, or actually going sideways. So actually it's going sideways. So so I determine the trading range all the way to here. Then it's get a little bit iffy now. This way, okay. So it kind of fail, but it doesn't fail too poorly. Then go higher. I neglect to draw another trading range here. Okay. This is so you can see the trading range is moving higher than moving lower, right? Then moving back to here. Okay. Then see the trading range moving higher again. The trading range moving higher again. Okay. So if you actually step back and you're a long-term investor, this you don't really have to worry. You are long because you keep moving higher.
Yeah.
Okay. But currently, we are in another trading range and doing that dance here, going higher, down, up and down, up and down. Okay.
Mm-hmm.
But the subtlety is even higher level of subtlety here. First, whenever you're getting, this is like all-time high. Whenever you're all-time high, you know that somebody is itching to sell, right? To sell lower.
Yeah.
So we don't know. So our job is try to figure out, is that going to become real or actually just going to be like this and moving the next level higher?
Right.
That's the $1 million question. If I know the answer all the time, I'm so rich, right? Okay. But
right.
So now we go to the point we call reading the tea leaves. Okay.
Reading the tea leaves. Okay.
Okay. So currently, the way I'm reading the tea leaves, also I'm glad because Steve, I must learn really well from the other Steve. Okay.
Okay. This is named Steve.
I come to the conclusion independent of his. When I think about something, this couple of days when he posts something, almost exactly like what I think. Okay.
Okay.
So when we start to see the trading range, at that point he was still feeling that he's bullish. Okay, he feels like still going higher.
Okay.
At that point, I already says I want to be cautious.
Yeah. At this point, okay.
Yeah, if you go back to my note, you know that I already become cautious until the day before yesterday. You have this Apple earning comes out. I want to show you. Okay, we are about to finish. Okay, because I think I already teach you a lot of important knowledge today. Okay. You need some time to digest that. No, let's not do that. Okay.
So this is Apple. Is this Apple stock?
No, actually, let's not do that. Okay, because that should digress. Let's focus on this. Okay. But bottom line is that 2 days ago, Apple come out with outstanding earning, totally surprised. So Apple, after hour, the price go from 150 to 160.
Okay.
Okay. With that much high, supposedly it should bring the whole market higher. Okay.
Okay.
But instead, you look at SPY, it doesn't go higher. Okay.
Yeah.
This is today. This is yesterday. See, it doesn't go higher. In fact, if you see this one, this actually got buyback, right?
Yeah.
Okay, so that actually tells you that even with such a good earning, it's not able to move stock higher, the index higher, which is not a good sign.
Okay.
Okay.
Got it.
That's what I talked.
Okay, can I just ask you that doji?
Okay.
That doji that has the really
I will answer that question after I make this point. I will answer that question. Okay.
Yeah.
So this is, why is this doing this? This is what my point is. Some idea of the general financial market. So that's Apple, that's news coming out. And how do you actually decipher that information?
Okay.
That's a subtlety. Okay.
Or how you interpret it.
How do you use the other term is how do you use the information? Okay. Now, you ask that question. It's a very good question. Actually, when you actually go with a very fine definition, very strict definition, this is not even a doji. This is kind of like hammer or long, or we can call it a long leg doji. Okay.
Okay.
Yeah, this is a long leg doji.
Okay. So
what's your question?
It opened there at the cross, and then it went up, and it went down, and then it came back.
Yes.
Is that right? Am I right?
You're right.
So it opened higher, then they sold, it went down,
Okay.
and it came back up. So
Let me
yeah,
show you. Let me show you this. Okay, this is the final result of yesterday, right?
Yeah.
And you are trying to describe what happened yesterday.
Yeah.
So I'm going to show you this chart. This chart is 15 minutes chart. Okay.
Okay.
So show you the detail of what yesterday is going on. Okay.
Okay. Yeah.
So let's see. Today is Thursday. So this is beginning of somewhere. This is 1 o'clock midnight. Okay.
Yesterday.
Yes. This morning. This morning. Okay.
Yeah. Right. Yeah.
So let's go with yesterday. Okay, yesterday. So do you see my pointer? Actually, it's 6 o'clock here.
Yeah, 6 o'clock.
Okay.
Is that yesterday at 6 o'clock?
Yesterday. That was yesterday 6:30. Okay.
Is that 6 in the morning?
Yeah. Yes.
Okay. Okay.
That's where the market opened. Okay.
Okay. Yeah.
So if I do this, I keep expanding that 13 hour. That is 1 o'clock my time.
Okay. Wow.
So this is exactly what yesterday action. Now compare these two charts. You see here, if you don't see this part, you say, okay, yesterday some point go very low and some point is higher and close almost the same as the open, right? Look at here. Open here. When the open was very optimistic going higher, then got sold off. Then got sold off all the way down here. This is where it shows on the daily chart here. You see my pointer?
Yeah.
Okay. This is the same as this one. Okay. Then people start to buy it higher. So this go higher and higher and higher and higher and go to here and stop here. So you can see that almost at the near the, see this is your open, right?
Yeah.
And this is your close.
Yeah.
So you can see that open and close are in kind of narrow range.
Yeah.
That tells you that's this narrow range. Okay. Then whatever is below the open, below the close, whatever range is below the action is below the close, become this region of your daily chart. Are you following me?
No, that I don't get.
You don't get. Okay.
I don't get that.
This is a summation of the whole day movement. Okay.
On the left.
On the right.
Or on the right. Okay.
Okay. This is whole day. Whole day only using one graph to show.
Okay.
Okay. This is showing that every 15 days, 15 minutes.
The one on the left is showing every 15 minutes.
Okay.
Okay. Yeah.
Think through your definition. On the top is going to be your open. On the bottom is your close, right?
Right.
Actually, it depends on the color, right? If it's
right.
solid,
but if it's red, yeah.
Okay, so it's red. So the top here is your open.
The open, yeah.
So I allow that to stay at here. On my right-hand chart, did you see that?
On your right-hand chart, yeah.
Okay.
Yeah.
You see the horizontal line?
Yeah.
And go to your eye to see the left-hand chart.
Yeah.
Does the horizontal line just mark the open of the first candlestick? Left side, your left.
Yes, it does. Yeah.
Exactly the same, right?
Yeah.
Okay. Now, if I move my right hand to the bottom of my right hand side. Okay, I need to, one second. Let me explain this. this doesn't show as well.
Hmm.
Okay. But the point I'm making is that, oh, that's correct. That's exactly right. Now I'm putting my, I don't know. Actually, I don't know. Let me try this. Okay. So apparently they are not using exactly the same day, but the gist is the same thing. Okay, so when you have the open here, that will tell you where your open on your daily chart is here.
Okay, when you have the open on your 15-minute chart,
yeah,
it tells you where your open's going to be on your
daily chart. Because they are actually happen the same time.
Yeah, okay.
Are you following me now?
Yeah.
Okay, because imagine you have to draw the candlestick yourself, okay?
Yeah.
On my right-hand side, then you will say, let me go and see yesterday what the price is open, I'll put on the top, right?
Okay.
So that's this line here.
Which line? Show me.
I'm going to.
Yes, okay, okay.
I am making one more effort. Come on. It doesn't listen to me. I cannot believe. Maybe it doesn't allow me to make even better. For some reason, it doesn't do this.
So
what I'm trying to say is that if you are going to draw this daily chart yourself, okay, what you need to do, you need to know the open price, you need to know the close price, you need to know the high, you need to know the low.
Right.
Okay, so the high will be here. Okay, because you look at the whole day here, the high is here. So that's where you put your top. Okay.
That's
the low is here. Right?
Right.
So you put your low here.
Yeah.
So now if I put my right, then actually fit nicely on my right hand side, right?
Yeah. Okay.
So I put my low is exactly to the same, right?
36. Yeah.
Okay. So this you already have 2 points. You know how to draw that too. Now your next question is how do you draw the body, right? Correct?
Right. Yeah.
Body will be, this is your open.
Right.
So you draw that on your right hand side.
Right.
Then you say your close will be here.
Right, right.
It's not exactly the same. I think the reason is that because this maybe is not the last candle.
Okay, got ya.
You know the gist, okay?
But, yeah.
The reason I show you this is if you see this, you can kind of imagine what happened during the day.
Got you. Yes. The chart on the left is condensed into the chart on the right by looking at your highs, your lows, and your, I got it.
Okay, so you get it. You actually learned something. I have never a student learned that from me. Okay, you are doing so well.
Really? Okay.
Okay.
So, I have one. Can I ask you?
Yeah, ask the question. Yeah, ask your question.
The trading range. When you talk about the trading range, I get what it is, and I kind of get how you figured it out. But what does that mean? What does the trading range bring you? Is that where you are setting like your stops and your where you're gonna like your highs and your? You're
actually getting ahead of the game. Very good. Okay. First, trading. If you have trading range look like this, make you more comfortable to stay long. Okay.
Like which? Like the one on the left?
Your trading range, one trading range is above the other trading range.
Okay.
That will tell you the market is going higher.
Oh, I see what you're saying. Okay. Yeah.
That's a general idea. So that's the general idea. The market is going higher.
Okay.
Then during that particular range, then you decide during this period of time what I want to do.
Okay. Okay.
So currently, summarize what I said already because I think that when I'm in trading range, I'm very careful to decide Only when it break out, I start to be more aggressive.
Okay. Okay.
So now, because I read the tea leaf, I say maybe the trading range may be at danger now. So I'm leaning on a little bit short side now, not a lot, just a little bit.
Okay.
Also, the major points that I keep repeating myself, I hope people really finally get it, is that so-called managing the how do I understand? Managing the market exposure. If you feel comfortable your market exposure, you don't worry too much about the trading range, because you only have to take actions when you break down the trading range quickly, then you get out.
Okay.
If you actually going higher quickly, you can decide.
Okay, got it. So the trading range is kind of like a comfortable net in which you can kind of just stay and see how it's whether it breaks out or not.
Yeah, that's you put it very nicely, and let me put it a different way to say that. Why is that? It's because the trading range essentially is the way you understand how bull and bear are acting.
Okay.
Right? Because we look at this, we know the bull and bear are acting kind of the sideways, but currently probably will move a little bit lower. Therefore, make my decision what to do.
Yeah.
Okay?
Okay, good.
Okay.
Whew. Yeah.
Okay.
Cool.
So I'm finished now.
Okay, good. Thank you.
No problem. Okay, take care.
Great. Okay, and you'll send me the recording?
Yes.
Okay, super. Thank you, Steve.
Yeah, bye.
So great. So great.